Welcome to today's video in which I will show you in real time how I trade my portfolio. My name is Lukasz Melka and I work as the head algo developer at Quant Monitor. My strategy is based on a systematic approach and a deep understanding of market regimes. The portfolio you are watching today is built on three distinct sectors. Specifically, these are gold, currencies, and stock indices. Each of these sectors has specific characteristics and market behaviors, which allows me to achieve sectoral diversification and limit the correlation between different parts of the portfolio. This helps me to minimize the risk associated with adverse market regimes that may manifest in one sector, as the other parts of the portfolio are usually unaffected. In this video, we will look not only at the current positions and their management, but also at the logic behind each trade. So let's get started. The strategies used in this portfolio are not random. They are built on our premium templates that we have thoroughly tested and that have passed all backtesting and robustness tests. If you want to take a closer look at how these tests are conducted and what exactly we monitor, you can find it explained in detail in our video course in the Premium Members section. Now let's take a look at the individual strategies I am currently using for diversification across sectors. I trade forex. Here I trade symmetrical strategies on the currency pairs euro-yen, euro-dollar, and dollar-yen. The aim is to exploit their different volatility and correlation structure. I also trade the American Nasdaq index. Here I have implemented a scalping strategy on a 5-minute chart focused solely on long trades. This approach allows me to quickly respond to intraday momentum. I also trade the European DAX index. I use a low degrees of freedom strategy here that operates in a long-only mode. The minimalist construction helps to better cope with changes in market regimes. I also trade the Asian Nikkei index. Similar to the DAX, here I also use a long-only strategy with low complexity, which increases its robustness under varying market conditions. I also trade gold. Here I trade a symmetrical long-short strategy based on our premium template, range breakout. This strategy responds to breakouts from consolidation areas and is suitable for markets with frequent rotations. Each of these strategies has been carefully selected with regard to the characteristics of the particular market and contributes to the overall uncorrelatedness of the portfolio. Thanks to this, I can manage the risk at the level of the entire system, not just on individual trades. Now let's take a look at the balance curve for the past month, which will show us how the portfolio performed as a whole. However, we will save the detailed analysis of how specific strategies reacted to market conditions for the next video, where we will address it in full. From now on, we will be doing these overviews regularly every month, looking at performance, markets, strategies, and any changes in the portfolio. The aim is to show you how the strategies work in practice, what influences their performance, and how we think about adjustments depending on market developments. So today we focused mainly on the overall view, and next time we will go into more depth.